The Hong Kong economy has long been known for two things: finance and logistics. But during recent years, when markets have been subdued and global trade weak, the territory has continued to thrive, thanks largely to its most recent incarnation as the Great Mall of China. 35 million mainland Chinese tourists came to Hong Kong last year, up by a quarter from 2011, and triple the number from 2003, when visa rules were first relaxed. The result has been a retail boom like no other, fueled by Chinese demand for luxury goods like watches, jewelry, and handbags.
I would say mainland Chinese tourists is the main momentum to drive up the boom, especially after financial tsunami. The spending power of the renminbi becomes better than ever before. So they would like to come here to do their shopping for luxury items. That's why the brands, they all compete for good locations in prime area.
This is Russell Street in Hong Kong's Causeway Bay area. It's now the world's most expensive shopping street, having overtaken Manhattan's Fifth Avenue last year. It used to be home to household names like Levi's and The Body Shop, but now you'll be hard-pressed to find anywhere that doesn't sell luxury handbags, pearl necklaces and gold coins.
For every dollar spent in Hong Kong each month, between a quarter and a third goes on watches and jewelry. As the big chains battle it out for prime spots, rents have continued to soar.
In Russell Street, the most expensive street in the world, for typical shops like 1,000 square feet shops on the high street in 2008, 2009, the rent was talking about $400,000 per month. But nowadays, if you want to lease the similar size of the shops there, you might have to prepare to pay for 1.8 million or 2 million.
The Chinese tourist wave has not just been felt in the main shopping districts. On the fringes of the city centre, international brands are now moving into parts of town best known for antique dealers, art galleries and noodle shops. Ralph Lauren will soon become the latest global name to open its doors on Hollywood Road, a street famous for its Ming vases. But while the global brands enjoy the boom in trade, local shopkeepers are feeling the pain. Rents are still going up sharply in many parts of town, forcing some to make difficult decisions.
To be honest, if I knew three years ago, my shop has been open for 3 years already. If I knew that in Hong Kong the landlord can raise the rent as they want, to be honest, I'm not that sure that I will open this shop. Because last year when I wanted to renew, and since the landlord increased so much, and I thought of moving out to find somewhere else cheaper. But actually, for a small business like mine, you are actually stuck in here. You got only two choices. Either you accept the new rent, or you just shut it down and finish.
The spike in Hong Kong's retail rents has not been solely down to rising numbers of tourists. Ultra-loose monetary policy, transmitted to Hong Kong from the US via its currency peg, has sparked a credit boom and made local products far cheaper than they are over the border. As those policies are reversed, and as Chinese tourists look further afield to other parts of Asia, some steam may yet be taken out of the market. The question is whether local shop owners can stay in business long enough to see that happen. Josh Noble, Financial Times, Hong Kong.